Hello, trading has closed on the 10th of July, 2024. As always, we'll do our disclaimer first. We'll go over our calls and then make our predictions. This is my trading plan for tomorrow, July 11th, 2024. Remember, my calls can be wrong. Trade at your own risk. Also, I was busy most of the day today. Didn't have a chance to watch the market. I'm not going to be able to watch the market all day tomorrow, and probably won't be able to watch it on Friday either. Not all day anyway. Well, we call for the pattern with the early low, which is this, and tomorrow should also have the early low. Well, here's what we said. We said bulls needed to gap and promptly overtake the high today to keep the rally going, and that's just what happened. Breadth continues to weaken. Sentiment indicators are close to a sell, and that's still true. I said it wasn't the environment where I'd expect a huge rally. I never defined huge. We rallied 1%. 1% in terms of points is pretty big, but it's not what I mean when I say huge. I think there's still a number of problems with the rally, which we'll discuss, and that doesn't mean the rally's over. We do have a lower target from today's patterns, 56.12.67. If we don't gap up smartly, the rules call for it to print, but when you have a number of them which haven't printed in a cluster, it increases the chances that one's not going to print either. We know from the 22-year track record of the system, these will print eventually, but that doesn't mean they print now. MEJT said this drop wasn't the real thing. It retraced. Now says the same thing about this. You could argue that's a wall into the close and should correct, but when there's a wall that hits a new high, it only drops 50% of the time, and 50-50 isn't how I like to risk my money. We have gone past the stop loss on some of the marks indicators on the daily chart. He says when they fail big, so according to that rule, there should be a huge rally here, even though we're over the upper Bollinger Band. I have a lot of trouble with that, but that's what this thing says. We have not gone over the stop loss on the weekly chart, because a weekly bar is longer than the ones on the daily bars. This one has to take precedence, because the longer the length of this bar, the longer the time, the more significant it is. Well, we've had a number of times that would have made good sense for the market to top out. All you had to have was the correction, which never started. I'm not very impressed with today's action being a candidate for a top, but you can always find something if you want. You said this was hard to count as an impulse, and if we did have an ABC up today, likes to make me work for this. Today's the day when A and C are exactly equal. There's also a proprietary price ratio of a friend of mine which hit this to the penny. If it is a huge drop from the open in response to the economic reports coming out, I can explain it, but I've seen a lot more convincing evidence that other prices in the market just blew through them, so I'm reluctant to say this moves over. If we collapse right in the beginning, I can explain it, but I'm not predicting that. Explaining things after the fact doesn't make you any money. Well, Thursday's pattern has a early low regardless of where we open. Typically it's a rally day with a high and a final low, but if it's weak we should see more weakness. The CPI report comes out before tomorrow's open, and the PPI report comes out on Friday. I just don't predict the responses to these economic reports with any degree of accuracy, and I'm flat going into them all the time. There is a lower MEJT target. Unless we gap up smartly, the rules say it prints. But we have a nearby cluster of failed targets. I say this happens about twice a year. It increases the chances that target's going to fail too. They should print at some time, but that doesn't mean they print tomorrow. We rarely pass the stop loss levels for some of the market's sell signals. Now his rules say if the signals fail, they fail big. The problem I have is breadth continues to deteriorate. The bullish percentage of stocks in the S&P 500 actually dropped significantly today. And that means fewer and fewer stocks support this rally. These stocks are market leaders, and they had big drops today. And usually when you have a rally that's sustainable, the market leaders lead the market higher, and these are falling off the wagon. Sentiment indicators are close to a sell. For all I know, they triggered one today. I don't have the data. Starting next week, the calendar is going to work against the long side as well. And there's a wave count in the proprietary ratio of someone else that would explain someone's high, that would explain today's high being a short-term top. But unless we drop hard and fast, preferably early, I'm reluctant to say the rally's over. I mean, if we have a negative response to the report and open way down here, I can change my mind. These rallies don't usually stop on a dime, though. That's one thing I'll say. And we've gone past a lot of logical places for it to end. Anyway, just be aware that we're kind of overextended here by a variety of criteria. Breadth isn't supporting this. Sentiment is on the verge of throwing in the towel. So in terms of time, even though this price might not work, in terms of time, I don't think we have a heck of a lot left. It's a pattern tomorrow with the early low. A collapse early, I'll believe. Otherwise, wave count or price percentages or not, it's just hard to go short when you're facing a rally like this one. These things tend not to stop on a dime. That doesn't mean it won't be painful when it finally corrects. And that's today's call.